Poonam is joining us now from the research desk. Poonam, give us all the highlights, all the key highlights for Axis Bank's Q3 performance then.
Yeah, thanks so much for that. In fact, the entire highlight remains in terms of the entire asset quality. We're seeing the slippages itself coming down nearly around 50% on a quarter-on-quarter basis. The slippages stand at 4,400 odd crores versus somewhere around 8,900 odd crores in the last quarter. Do know that last quarter the bank exceptionally saw a very high amount of NPA stress. In this quarter it was expected that we may see some amount of decline in the NPAs, decline in the slippages, and that is what we are getting. In fact, we're also seeing slightly higher upgradations and recoveries. The upgradation and recovery is standing at nearly around 4,000 odd crore versus 1,000 crore in the last quarter. So I guess that's another main positive sign in terms of the entire asset quality. Just in terms of, again, the other numbers, we are seeing the margins coming down nearly 7 bips sequentially. 3.38 is the margins versus 3.45% in the earlier quarter. The net interest income remains fairly in line, but the profits are slightly below our estimates. This is the first take as of now, and as I'm going through the entire press release also, we understand that the bank provision cover of course has increased to 66% versus nearly 60% in the last quarter. We're also seeing that the provisions overall have come down to 2,800 crore versus 3,000 crore in the last quarter. But the fact is that the provision cover has improved, which definitely is a good sign here. So I guess overall we are seeing definitely better asset quality than the last quarter. Some pressure on the margins, but more or less the margin pressure is in line with what the analysts were working with. There was expectation that we may see margin pressure there. Again, reading from the press release there, recoveries and upgrades stands at 4,008 crore. Write-off stands at 2,822 crore. During this quarter, the bank has recovered substantial amount in cash from an ITES account and also upgraded one account in steel sector. These two accounts were part of the 9 accounts that were reclassified as NPAs in the last quarter. So there is one upgradation in the steel sector, and there is one recovery coming in the ITES account. I guess these numbers seem to be good so far, Karunya.
Second, you may have question to Hemendra Hazare, who's joining us now. Hemendra, provisions have reduced, NPAs have reduced. There is a slight bit of reduction in NIMs as well. You have been quite skeptical how you have approached Yes Bank numbers. How are you approaching Axis Bank numbers?
On the face of it, these numbers appear to be very good. But as I said, especially private bank, one has to go behind the face. So from these numbers, yes, they are very good numbers. Provision coverage ratio has improved. The slippages are much less. The write back most likely a amount. But in my view, these new private sector bank analysts and investors have to be extremely careful, and one has to really probe deeply into the numbers. But I think the numbers that what we have seen are definitely more reassuring than what even analysts like me would expect.
Right, Hemendra, hang in there. I want to bring Poonam back into this conversation. Poonam, it's not just the asset quality which has improved. I think the improvement has also come in, it seems, from the larger accounts. I believe that press release talks about the reduction in the number of accounts of watch list, and more significantly how there has been a cut down in exposure to the NPAs in the RBI's dirty dozen list.
That's right. In fact, Nayantara, as I go through the press release, it does state that the bank's watch list has declined nearly around 12% over the previous quarter, and it now stands at nearly around 5,300 crore. In fact, they're also updating that their exposure to the IBC account mentioned in the two lists referred by the RBI has declined, and that amount now stands at nearly around 6,000 odd crore. If I recall right, that exposure stood at slightly over 7,000 crore in the last quarter. So an approximate reduction of 1,000 crore to the both list of RBI IBC accounts. They're also stating that they have gone ahead and made incremental provision of 237 crore against these accounts during the quarter, and hence the total provisioning towards both these accounts or towards both these lists now stand at nearly around 4,000 crore, and hence the overall provisioning or the overall provision cover to both the list of the IBC accounts is now standing at 68%. I guess these are definitely good signs, and this definitely is a good amount of improvement, and the improvement that we are seeing is that from the worst that we have seen in the last quarter, I guess this is an improvement, but I'm not too sure if this trend can continue. We will really have to wait and watch out for the management on that. But Avinash, what is your take on this entire asset quality picture? We are seeing that the bank has gone ahead and increased the provision cover to 68% of both the list of RBI IBC accounts. Their watch list also has reduced slightly. Slippages are down. Recoveries and upgradations are better.